Fintech company Chime posted 29% revenue growth, more than 9 million active members as well in the third quarter. Company also announcing a $200 million buyback. It raised its full-year outlook. Joining us now in a first on CNBC interview is Chime's co-founder and CEO Chris Britt. Chris, I went through some of the highlights. There's even more gross margins, net loss was lower, adjusted EBITDA. All that being said, your stock just keeps going down 31% since you went public. I wonder, is that a frustration to you?
Absolutely. We think the stock's undervalued. But I think, like many companies that go public, there's initially some volatility associated with the new issuance. So I think it's our job to educate investors on this enormous opportunity we have ahead of us. You know, there's this secular shift happening in banking towards service providers that are actually helpful, easy, and free. Chime's leading the way. Just last quarter, J.D. Power announced the companies that open the most checking accounts in America, and Chime was at the top of the list, above every major bank in the country. So I think we have to continue to educate and execute. And if we do that, I think over the long term, the stock price will take care of itself.
Do you think that there is concern, and obviously I'd like you to address it, amongst the cohort that you are most associated with, people earning below $100,000? We talk about it all the time, being under stress. A, are you seeing it? And B, are those concerns relevant?
I think there's no question that there is a malaise over consumer companies that serve this population segment, that serve up to $100,000 a year. Just for some context, that's about 70% of our country. And Chime is really, the go-to bank account for consumers in that segment. When we look at the transaction activity among our members, we actually aren't seeing any struggles. It's a very resilient consumer we see. We actually see more discretionary spend than we have in the past, which would suggest some amount of confidence among our member base. They're spending on Uber Eats and DoorDash. They're going to restaurants. We're seeing double-digit year-over-year growth at Costco, spending on Amazon, on TikTok, like TikTok Shop, you name it. We're seeing a very healthy consumer. We haven't seen any uptick in unemployment benefits coming to our accounts. So, and at the same time, the short-term credit extension products that we have with our members are performing exceedingly well. In fact, we reported that we've reduced our losses on our MyPay product well ahead of schedule. And so we think that assigning that concern for our business model is not appropriate.
I was going to ask about credit quality and what you're seeing on the metrics. As you know, we have seen debt levels continue to rise, borrowing for credit cards and that sort of thing.
Yeah, so Chime is primarily a payments company. That's the majority of our revenue. So we get consumers to sign up. They use us for their direct deposit, recurring direct deposits into the account. And then we make the majority of our revenue from the everyday spend that they do, largely on non-discretionary, but like I said, more recently on discretionary purchases. The credit quality in terms of the short-term credit that we do with our MyPay product, which allows our members to get access to their paycheck on demand. There's a free option or a low-fee option to get that at any point in time over your pay period. We've seen loss rates actually come down by 20 points just in this past quarter ahead of schedule. So we think there's good news on that front, and we're going to continue to execute. And we think that having this direct deposit relationship really puts us in a privileged position on top of the repayment stack for even these small dollar extensions that we give to our member base.
Yeah, it was something we talked about when you went public. Obviously, we did an interview then. I'm curious then, I mean, there seems to be some dissonance between what you're seeing and what at least we're hearing in some data and or at least anecdotally hearing as well in terms of the pressure, that consumer that you are catering to is under.
Well, all I can say is that in the 2 quarters now that we've been public, we've beat our consensus numbers. We've raised guidance. We grew our top line 29%. We grew our active member base by over 400,000 new members, to getting to 9.1 million actives. We have a very healthy business, and we're going to continue to execute and put points on the board. And if we continue to do that, I think the proof ultimately is in the results, and we're very confident in the results. We just launched a new product called Chime Card, which gives our members 1.5 cash back on the most essential categories of their everyday spend. And we have a interest rate of 3.5%, which is about 8 times the national average. So this combination of services is fueling our growth and allowing us to outpace the incumbent competitors that we really ultimately compete with.